All right. Welcome, everyone. Let's just go straight to the agenda. We're starting with what is SMC, back to the basics, type of market structures, calculating gold pips, introduction to strategy, utilization of the strategy, questions and answers, and of course, a surprise for everyone that stays till the end. So what is SMC? It's called the smart money concept. It was created by Matthew Huddleston. It's a concept of trading where a pattern or algorithm occurs frequently. So it is believed that the big players like the central banks trade in tune with these patterns and make a whole lot of money at the expense of retail traders. At the expense of retail traders. All right. So there are three phases involved in this concept: the accumulation, the manipulation, and the distribution. Hold your horses. I'm going to be explaining everything about these three phases. I'm going to be explaining everything about these three phases. All right. Beautiful. I'm going to be explaining everything about these three phases. And we're going to go back to the basics for the newbies. There are two main directions that the market goes. It's called the uptrend and the downtrend. Two main directions in the market, the uptrend and the downtrend. What do we do with the uptrend? We buy in an uptrend. The zones where we buy, they are called the supports. So we buy at the support in an uptrend, all right? And we sell at resistances, all right? So when the prices are coming down in a particular asset, it is called the downtrend. We sell at the zone they call the resistance, all right? That is basically what it is. Now, there are little candles that make up a trend, all right? These little candles, we have the bullish candles. These are the candles you find most of them in an uptrend, all right? You find most of them in an uptrend because it starts from the bottom and moves to the top. So it opens at the bottom, closes at the top. There is something called the wicks, which are these small particles right there. You can see the wicks. So these wicks just show how high or how low that particular candle has gone before it closes. All right. So I'm going to show you guys in the chart. So in an uptrend, you see more healthy bullish candles. Even if you see tiny bearish candles, you see very big bullish candles in an uptrend. An uptrend is also known as a bullish trend. So you see most of these these bullish candles in the bullish trend. All right. So they make up the bullish trend. Then we have the bearish candles. You see more of them in the sell trend or the bearish trend. All right. So I'm just brushing up for those people that are new so that you will understand where I'm going to with it. Okay. It's just to touch on the basics. These are the most important things you need when it comes to trading this strategy. Just understand there is a bullish trend, which is the uptrend. There is a bearish trend, which is the downtrend. Just know that in the bullish trend, you use the bullish, you see most of the bullish candles in the bullish trend, or more healthy, big bullish candles in the bullish trend. And then in the bearish candles, you see, the bearish trend, you see the bearish candles. Now, the bearish candles open from the top, they start to drop. So because they move the prices down, they open at the top and close at the bottom. And then these wicks you see are just how high they've been before before the close, and how low they've been before the close. So this one just shows you that it started here, it opened at the top, okay, moved up a bit, came down all the way here, went back up and closed here. It's easy. So I'm just showing you for especially the newbies. I don't want to waste your time because we are going to concentrate on what we came here to do. All right, what we came here to do. Now, the market structure. Now, when you look at market structure, what does market structure do for you? It shows you the direction of the market. It shows you the direction of the market. It shows you where the market is going. This is an example. I got it off Google. So you can see the way this market is moving. It shows you it's a downtrend. So this structure is showing us that the market is going down. And what do you do when the market is going down? You sell. You sell when the market is going down. All right. You don't go against the trend. Most of the buyers, most of the people that know what they're doing should be selling in a downtrend. All right. So the market structure shows us the direction, and the market structure also shows us when the direction of the market changes. Now, I need you to, if you've not been paying attention, I need you to pay attention very well, because this is the key of what I'm about to teach you, knowing when the market is about to flip. All right. So market structure also shows you when there is a change in the direction of the market. So if we have an uptrend, this is an example of an uptrend, all right, that flips to a downtrend. All right. I'm going to be showing you how to easily identify when the market structure is changing. All right. Whatever your questions are, hold on till the end of class. There is time for question and answers. Please, no distractions in the chat box. Thank you. So the market structure also shows you when there is a change in direction. It could be from a bullish trend. It could be from a bullish trend to a bearish trend. It could be from a bearish trend to a bullish trend. A typical example is right here. From a bullish, it changed and flipped to a downtrend. All right, good. Just calm down. Calm down. We are getting there. And then we have how to measure the movement in this market. Like when you have gold move from 1,000 to 2,000, it is calculated in pips. It is calculated in pips. So measurement of change in value of a particular currency or a particular asset is what we call percentage in points. It's called pips. All right, it's called pips. All right, so I'm going to show you how to calculate pips in gold, but I'll show you others as well and how it is different, how to calculate pips. So for USD pairs, I'm talking about the normal assets like the GU, you have the AU, GU is GBP USD, which is Great British Pound against the US dollar. We have the EU, which is an example here. Now imagine you have the EU, okay? We have AU, so many of them, all the ones that have USD in the pairs, anything that has USD, all right? This is how to calculate the pips. You calculate it from the 4th decimal place. Like you can see, this is 1.3500 to 1.3505. Imagine Euro USD moves from this to that. This is the 4th decimal place. So you just have to do a subtraction of these 4 decimals like that. 3505 minus 3500. The difference is 5 pips. So you know that Euro USD has moved 5 pips, all right? And that's an increase, all right? But if it moves down, so if it moves from 1.3400 to 1.3350, it has moved how many pips? Look at that, right? It has moved how many pips? It has, so this is 3,400 minus 3,350. It has moved 50 pips. So you can see, and it's in decrease. So you can see how it is to calculate for USD. But see JPY. JPY pairs, USD JPY, AUD JPY, anything with the JPY, you can calculate it from the 2nd decimal place. All right, from the 2nd decimal place. So for example, look at it. If it moves from 100.10 to 100.15, the answer is increase in 5 pips. The subtraction of the 2 decimal places, which is 15 minus 10 right there, and it gives you 5. All right, look at this one, okay? Moves from 88300 to 88150. Ignore this. The 3rd value is the pipette. Pipette is what they call 1/10, it's a fraction of a pip, which is 1/10 of what? A pip. So pipette is a 1/10 of the pip. So these ones that are not necessary, because remember, 2nd decimal place is what we are focusing on. So the 3rd one is what we call the pipette. Likewise here, if there was a 5th number after these 4 decimal places, that is the pipette, all right? So I'm just concentrating on the pips today. So look at that, from 88,300 to 88 watts, 88.150. If you remove the zeros, which are the pipettes, it is 30 minus 15, and it gives you 15 pips. Now let's enter gold. Let's enter gold. Now the difference with gold is, for gold pair, it is calculated from the 1st decimal place. It is calculated from the 1st decimal place. All right. So for example, if XAU USD, by the way, for those that don't know, gold is represented XAU USD. All right. Good. I just had to check because I saw a lot of things going off. So gold pairs are calculated from the first decimal place. All right. So if gold moves from 1850.50 to 1850.51, the answer is an increase of 1 pipette. Why? Because this is the second decimal place. Remember, gold is calculated from the first decimal place. So these ones are the pipettes. The first decimal is the first number after the decimal point. So if you look closely, you will see that the only difference is that the pipette has changed. So the answer here is 1 pipette. And then if it goes vice versa, you know it's a decrease in 1 pipette. But then if you're now calculating pips, look at it here. Look at the difference, the first and what? The second. Throw away the pipette. We're looking at the pip right now. So this is 6 minus 5. And what is it? 1 pip. That is how to calculate pips for gold. All right. Now, why am I using pips? Because there's a way to leverage. If you follow me on YouTube, just go on there. I did a whole video on how to, calculate your pips with leverage and how to know how much you're losing and how much you're making. But this is how to calculate pips, because a lot of people get confused on how to calculate pips for gold. All right. Now, if there is no value after the decimal point, that is when you add an extra 0 to your answer. Like here, we have 1850.00, okay, and 1851.00. What's the difference? The difference is 1. But because there is no longer a decimal point, it is 10 pips. So from 1850 to 1851 is a move of 10 pips. And that is why we make so much money quicker with gold. Because one tiny movement like this, you've made 10 pips. So if you're using a standard lot size, 10 pips is how much? How much are you making with 10 pips? If you're using a micro lot size, 0.01. That's 10 cents times 10 pips. That's 10, right? That's about $1, right? So you see, it's a lot of money. You will understand how to calculate these things in my former video. I've had a class like this. So go on my YouTube. I have it all there. I don't want to waste time concerning this because we have a lot to do with the strategy. So from 1850 to 1860, it gives you how many pips? Because now it has moved from this one. It is here now. You have to add an extra 0, 100 pips. So that is how to calculate gold pips. It's different. And because with every single move, with every very tiny move, you made a lot of money. That is why a lot of people prefer to trade gold. It doesn't waste your time. If you're gonna lose, you're gonna lose quick. If you're going to win, you're going to win quick. All right. So let's move on to why we are here. I call it the Madame's Gold strategy. Hello. I know a lot of people might have discovered this strategy, but I discovered it for myself. All right. So these are the checkpoints. These are the checkpoints. I need you guys to take notes because we are still going to go into the practical side of things. All right. We're still going to go into the practical side of things. So this is my checklist. I trade gold in the New York session. All right. I trade gold in the New York session. Take notes. I trade gold in the New York session between 8 a.m. and 11 a.m. New York time. New York time. All right. I mark out the highs and lows of the London session. I wait for a liquidity grab from either the high or low of the London session. I wait for a change of character on the 1 minute time frame. I target a 2RR at least and snipe at an FVG or the zone where there has been a change of character. Don't worry, I will show you everything inside there. We are just using this for our theoretical part of the class. We are going to enter the practical part. So take notes. This is my checklist. 1, I trade gold in the New York session between 8 a.m. That's why I have to wait at a particular time. For those of you that were very observant, you would notice that there was a particular time I was always dropping the signals. It was always in the New York session. All right, always in the New York session. I mark out the highs and the lows of the London session. I wait for a liquidity grab from either the high or the low. I wait for a change of character or change of direction in the trend, or after the grab of liquidity on the 1 minute time frame. And then I target a 2RR at least and snipe at the FVG zone or the change of or the CHoCH zone, the change of character zone. Now, for high probability trades, I always do a top-down analysis to understand where the trend is going. So top-down analysis is when you start from a higher time frame to understand the movement. You know, she might just be doing, with the strategy, you might just be catching a pullback. But then that is when you know that you shouldn't target too much. Your target shouldn't be so much. Just target a 1:1 or 1:2. So if you notice that your strategy is showing you, you're going to catch a pullback with the strategy. I mean, knowing fully well, this is where it is going to, and this is where it's coming from. You're going to be targeting a reasonable target. You cannot be over-targeting. It will never get to your TP, although gold misbehaved last week. It did what it had to do. She had to be herself last week. She showed us. But that's fine. We still overcame. Because out of the 13 times we traded, we won 11 times. Fantastic. All you need now is your risk management. That's all. With your risk and then keeping your emotions on check. Of course, if you have great risk management, your emotions will not be all over the place. All right. So I have to know the direction of the market by doing a top-down analysis. All right. Then I know that, okay, if my strategy is going to target a pullback, I shouldn't be looking for a big target. I will just use my 1:2. All right. So 1RR or 2RR, 1:1 or 1:2. Okay. Look out for the news and try to be out of the market before the news or no trades at all. If you're the type of person that likes to be safe, all right, if you like to be safe, just stay away from the market once you notice that, in fact, something happened last week. We were expecting the news, and guess what happened? The news was leaked before the news, and then the effect of the news, you know, made us to lose our trade. So a lot of manipulations occur in the market, all right? Somebody will leak out the news before time, and then you see the markets acting weird. So it happens. So if you're the type of person that doesn't even like that to happen to you, just when you see trades that are close to the time that you're about to trade or you're waiting for your setup, just back off. It's not hard. You live to trade another day. Markets know they run. Market doesn't disappear. It's there to stay. All right. So thank you very much. Right now, we are going into the charts. If you have your laptop, this is where I need you to bring out your laptops and do what I am doing. If you don't have your laptop with you, write down every single step because we are about to get our hands dirty with the strategy. So I'm just going to go, all right. I'm just going to go to my trading view. All right, I'm just going to go to my trading view. Right now, the markets are closed. Only the cryptos are open. Only the cryptos are open. Yeah. All right, so I'm just going to clear all this. I'm just going to clear all this. All right. I hope everybody, this is the deal now. I hope everybody is listening. So for the newbies, all right, this is what you call an uptrend. All right. This is a bullish candle. I use the green to identify bullish candles. So they open at the bottom, close at the top. And then for the red candles, which are the bearish candles, they open at the top and close at the bottom. The wicks just show how high and low they've been. All right. This is a downtrend. You can see that You can see that this is a downtrend. For my newbies, this is a downtrend. Even if you can see green candles, you see more bigger bearish candles in this trend. So you can recognize a downtrend. So what we do here is that we sell at the resistance zones, all right? So that being said, now I'm going to ask everybody, go to your indicators. This is the strategy proper now. Go to your indicators, all right? Go to your indicators. Now, I need you to type sessions. You see this one? This is the one, sessions on charts. Sessions on charts. Pick it. That's the indicator I use. I don't use indicators, but this one is special to me because it keeps my charts clean. I don't have to start drawing lines to know highs and lows of no. This helps me. So I click on that, and you can see she's out there. One of them, another one. So then you go to settings. When you click on that, let me show you the settings of the one I've already done before I use my hand and spoil something. So these are the settings, all right? Now make sure you activate your high and low views. Make sure you activate your high and low views. Make sure it's on. Under inputs, make sure it's on. All right, make sure it's on. Now, before that, there's something I want to show you. You see where the time zone is? Make sure your time zone is New York time. You're going to be trading like you're in the US. Make sure your time is in New York time. All right? So make sure your time zone below here is in your New York time. I hate this cross. See right there. Do you see below my screen? Follow my arrow right there below my screen. Click on that time zone and choose the New York session. All right? Choose the New York session. Come back to where you have that indicator. Click on the setting and activate your highs and lows. Now, someone is saying I'm fast. You have to keep up. We don't have time. You have to keep up. We do not have time. All right? You have to keep up. And I'm really trying to be very audible. I mean, I've not even said anything. I've not even said anything. I just said, come to your time zone, choose the New York session, and then go to your indicators, pick sessions on charts. I typed it out, sessions and charts. I'm doing it again. Sessions on charts, or rocks, AUROCKS, sessions on charts. Pick it and then come to settings. Put on your activate high and low. That was all. Am I too fast? You need to keep up. They have to go home. People are tired. Okay? I don't want anybody to spend so long here. So keep up with it. Keep up with it. Don't be too slow. So turn on your London session. You're going to turn it all on. I want you to turn it all on. You see the London, New York, but then remember your settings. For your London session, it is 12 midnight New York time to 8 a.m. New York time. I repeat, your London session, just do it like this, 12 midnight New York time to 8 a.m. New York time. That's your London session. All right, just do it with me. I know a lot of people know more than I do. Please just calm down. I know why I'm selecting from midnight to 8 a.m. All right, just do it. Just follow the instruction. Relax. All right. I know a lot of people here have been trading for a long time. They know better than I do. So just calm down and learn the strategy. All right. New York session is from 8 o'clock, 8 a.m. to 11. Just copy it. All right. The Tokyo session, which is the Asian session as well. It is between 7 p.m. all right, to midnight, New York time, all right? Then we have the Sydney session, which is also known as the New York afternoon session. All right, I call it the New York afternoon session. So I charted it to be between 1 after the lunch break. Their lunch break is between 12 in the afternoon to 1. So the New York afternoon session, AKA the Sydney session, is from 1 p.m. New York time to 7 p.m. New York time. Just do it this way. All right, tick them all. Tick them all. All right, it's fine. Just tick them all. Or you can just tick London and the Asian session. See, I mean the London and New York session. You can just tick the London and New York session because I trade it on the New York session anyways. All right, I trade it on the New York, and you see your charts will be like this. Your charts will be like this. All right, your charts will be like this. You can see. Now, listen to me and listen very well. The green one is your London, and the red one, the red highlight, is your New York. But the beauty of this session is it marks the high and the low for me. So once I see the box, I know the highest part of the box and the lowest part of the box, and I'm good. I am very, very good. All right. Now let's get down to how to do this thing proper. But before we go on, let me show you. You need to understand 2 things. All right. Apart from knowing the uptrend and downtrend, I need you to understand the difference between the break of structure and change of character. Now, just stick with me. Go with me. Listen. When we have an uptrend, all right, when we have an uptrend, all right, this is an uptrend. There's the low, the high, the higher low, the higher high. Why is this called the higher low? It is higher than this last low. All right, so we create higher lows and higher highs in an uptrend, aka bullish trend, where you have mostly the bullish candles. So when you have an uptrend this way, all right, and you see this happening, you see this happening, this is your high, I mean, this is your low, all right, this is your high, all right, this is your higher low, and another, and then you have a higher high right there. Now, do you see that when you had your low and your high, you had a higher low, there was a break of this line where there was the former high. So when this went higher, I always call this a starting point. So I call this a starting point. I had a coach, Coach Oran. He calls anywhere that pushes the market higher is the starting point. This is a starting point that pushed the market higher in an uptrend. Now, when it goes higher, it breaks the line where there was the former high. That is what is called a break of structure. It has just broken. It has just broken to create another high. All right. That is an example of break of structure. All right. But then when you have something like this, you can clearly see that the market has changed. All right. You can clearly see that the market is now going down. I want to show you something. It's no longer just a break of structure. All right. This was the last starting point that pushed the market to its highest. It's the last starting point that pushed the market to its highest. All right. Now, the only way to identify when there is a change of direction is when the market moves opposite way and breaks structure coming down. Like here, this is where it broke the structure. Here. All this one, it didn't break any structure because it did not break a starting point that pushed the market higher. It just came down and broke here. This is where you have your change of character. Now, your change of character is what you use to identify when there is a change of direction of the market, when the market is about to flip. All right? When the market is about to flip. So when you have this, let me show you something. When you have an uptrend, down, starting point pushes the market higher, down, starting point that pushes the market higher, down, higher. So when a starting point has been broken, when a starting point has been broken, and not just broken, a candle has to break it and close below. That is when you know you have a change of character. That is when you know, oh yes, I'm ready to sell this market. Some of us like to wait for it to break twice, because sometimes markets can do this and still go back. So some of us like to, especially since I'm dealing with the lower time frame, I like to see that it has broken it. One, now it's breaking the second starting point. Two, then I know that I'm ready for anything now. I'm going to sell this market. Nothing anybody is telling me. I'm selling this market because I have seen that the change of direction has happened. So there is a signal that it is now selling. All right, it is now selling. So it has to break a starting point. All right, now let me show you why. If it does this, you can see it has not broken any starting point here. In fact, it's doing what we call consolidating. It's moving sideways. All right? Until she does this. And even if she breaks this one, that is not your change of character, because this was not the highest. You have to look for the starting point that pushed it to the highest. That is where you have your change of character here. All right? That is your change of character. Hold up. Now I'm just going to use lines to demonstrate. There's a line here. There's a line here. There's a line here. I'm just going to be using all that so that you people understand what I'm saying. So remember, she did all this zigzag right here. Then she finally broke through. Somebody will say, this is change of character. No, this is not where it changed character. It changed character when it broke here, this one, because this is the place that pushed the market higher. Let's say it didn't push the market higher. It has not yet broken. It is until it breaks this one. Why? Because this is the one that pushed the market higher. This is the highest zone of the market before it changed direction. All right? So not just changing, it has to break through and close below. The candle that breaks it has to close below before it is verified. It doesn't matter the time frame. You can find a change of character in 30 seconds time frame. All right? Now, same goes for a downtrend that flips to, same goes for a downtrend that flips to what? An uptrend. Listen, no, I'm going to delete it and start again so that you don't make a mistake. I need you to follow me. High, low, lower high, lower low, lower high, lower low. All right? Follow me. Now, I'm going to do this again, but I'm going to do it in another way. Now we have low, high, low, lower high, starting point that push the market lower. Starting point that push the market lower. Starting point that push the market lower. Now you have to be able to identify your starting points. Here is a starting point that push the market lower. Here is a starting point that push the market lower. Another starting point that push the market lower. All right. Now, look closely. This is not your starting point. It didn't push the market lower. All right, this is the one that pushed the market lower. Right? This is not your starting point. You are not going to assume a change of character here. No. You're going to assume a change of character when it has broken a point that pushed the market lower, and not just breaking it. A candle has gone through it and has closed above it. That is your change of character. So all the while it's doing this, it's just break of structure. It's just break of structure. All right, this is just a break of structure. This is a break of structure. So you find break of structures in continuations. All right, you find break of structures in continuations of a trend. This is a break of structure. This is a break of structure down there. But then you see all this rigmaroling. All right. You see all this rigmaroling. Then when it goes back and breaks a starting point that pushed the market lower or higher in an uptrend, that is when you see your change of character. Please know the difference. All right. So we have just gotten to understand the difference between a break of structure and a change of character. You need to know your change of character for this strategy I'm about to show you. That's the most important thing. You need to know your change of character. So now let's go down to the strategy. All right, I'm just going to delete all this. All right, let's look at our beloved gold, our gold baby. So remember, we have gone to settings. We have gone to indicators. We have picked sessions on charts. We have set our sessions. London, you can take a screenshot, like some of my people there have told you. Take a screenshot. So we have the London, we have the New York. Set it just like this. Set it like this. I don't care what you learned before. Set it like this for me. All right? Good. Once you set it like this, this is what you look out for. We trade gold on the New York session. We trade gold on the New York session. Guys, you're trying to record this thing, and I don't know why human beings are this way. How do you think you will record my class? Well, so you can see this is a beautiful illustration. Anyways, if you ask me, this was a loss. This was a loss, okay? This was a loss. So this is what we're looking for. We want to see a London, we want to see the London session, like I said. We want to see the London session. We want to see the London session. So this is a box showing us the high and the low of the London session. Now, this is what we are looking for. Now, this, we now open our laptop when we know that the New York session is starting, which is from 8 a.m. New York time, looking at my chart, looking at my trading view. Now, let's say this is another box for, I'm going to make it red because New York is always red on my own charts. Sorry. All right. So this is usually the New York session. And now let's say we see gold now. We have seen probably she's been doing this, doing that, doing this in the London session. That one no concern us. It's not our business. All right. Let's say she's been doing this. She's been doing this. That's not our business. This is the London session. She's been doing this, doing that, but this was the highest she went, and this was the lowest she went, and that is all we need. We just need to know the high and the low of the London session. All right. Now, apart from knowing the high and the low of the London session, are you listening? Please listen carefully. Listen carefully. We now keep watching. We now keep watching the market when it gets to what? The New York session. So when the New York session opens, she's like this, moving around, Now we need to mark out and notice where she breaks first with the former session. All right. Now, in this case, when she entered the New York session, when the New York session opened, this was the high of the London session. This is the low of the London session. The question is, where did she grab first? From this, you can see she didn't touch below the London session. She went and grabbed liquidity on the high of the London session. Listen to me very well. The movement within the New York session, when the New York session opens, you wait, you fold your hands, you sit on your hands and wait to see which way she's going to grab liquidity first. All right? Which way is she going to grab first? Now, remember our checklist. From what we have seen, she has grabbed here first. Now, it's not just grabbing. She has to grab, just, pass. She must pierce above here. I don't believe in just tapping. The candle has to have crossed here. That's what they call liquidity grab. This brings me to what I call the accumulation, the manipulation, and the distribution. All right? So what we want to see is that liquidity is grabbed here. That is your manipulation. She has grabbed it here. You can see. That is your manipulation. Now, what you now are looking for is change of character after your what? After your grab of liquidity. Your change of character after your grab of liquidity. Has she changed character yet? No, she hasn't. She hasn't changed character yet. She has not. Has she changed character yet? No or yes, she has not changed character yet. I'm not going to say she has changed character yet. No, she has not changed character yet. What I need her to do is break the starting point that took the market higher. All right? Break the starting point that took the market higher. This is the starting point that took your market higher, and this is the highest it was. So when she finally breaks here, and not just breaks here, the candle has to close below, your change of character has happened. So once there is change of character, now what are you looking for? I usually like to look for a fair value gap. I'm going to be dropping a video on how to recognize fair value gap very well. All right, I'm going to be dropping a video on my YouTube channel on how to recognize fair value gap. You can always go back to it. So there's usually a fair value gap here. I enter below. I'm just going to grab this real quick. I enter that starting point where she broke below. I can enter here or look for a fair value gap to snipe, and I will sell. One, look for your liquidity graph. It can be above or below the London session. Two, look for your change of character. Three, look for where you can snipe for your fair value gap, okay? Or you snipe it at the starting point that was broken, and then you snipe for your trade. Now, for high probability trades, if your strategy is telling you to sell, and you've done your top-down analysis, and you know that you are supposed to be buying, Please do not target more than a 1:2. Do not target more than a 1:2. All right? For your RR. Do not target more than 1:2. You use I use this calculator that helps me to calculate how much leverage I should be using. That's so that I don't, for those of us that don't know how to do risk management, there is a calculator I use to give me the right leverage to use. It is called Cashback Forex. So all you need to do is go to www.cashbackforex and use the calculator. I can go back and show you guys. I need you to get this first. All right. Now, I sold and I take my money and leave. But if it goes with your trend, guy, if you have done your top-down analysis and you know that you're supposed to be selling, target at least a 1:3, nothing will happen. You will chop your 1:3 and you will hit your take profit. So you either use that or you look for where you see equal lows if you're selling. On this side of this thing, you can see equal lows. Anywhere you see equal lows, target for your entry, because remember, target for your exit, because remember, hold up. Remember, no, not this one. I want to see the vertical line. Remember, when she has changed character, she has divided, just look at the left side when she has changed character. Start looking for an equal low where you can take profit. You can just use that and take profit. Once you see equal low, you can decide, okay, I'm just going to target the first equal low I see and I take profit. It's up to you. Now, that is your choice to make. It's not my choice. I'm not going to be trading for you. So you make your choice. You either look for an equal low to take your take profit, or you target a 1:3 if the trend goes with, if your entry goes with your trend. Now, this is your stop loss. Your stop loss is where she started turning from. Where she started turning from is your stop loss. Please, don't be deceived, especially because I know I'm always in the 1 minute time frame. Don't go and start target. Just look for where she started turning from, all right, and target. So this is okay. This is okay, but I'd rather do this. I'd rather do this. So once I cite my change of character, all right, I move. I know that, okay, the next high or where it started from is where I take my stop loss, is where I'm going for a stop loss. If it is too much, I just don't take that trade. If the stop loss is too much, I don't take the trade. So if I have more than, let's say, depending on how much I have in my account, some of us can deal with it, 30 pips. If it's more than 30 pips, I'm very, very skeptical. I'm very, very careful as to how I enter. If my stop loss is more than 30 pips, I'm very, very, very careful because of the kind of, it depends on your account anyways. Depends on your account. If your account cannot take it, like I say, if you don't have up to $100 in your account, you have no business trading gold. You have no business trading, you're not ready. Trade other assets. Trade other assets. Don't trade gold. You cannot be trading gold with less than $100. I always advise, unless you're here to gamble. And then if you lose it, fine. If you make it, fine. So now let's see a practical example. Let me show you a practical example. First of all, before we go there, these are the three phases of the SMC. These are the three phases. Remember, accumulation. Accumulation is where you see a bit of a consolidation, or where you see, liquidity pools. All right, where you see liquidity pools is like what we call, this is the phase we call the accumulation. Now, the manipulation is when she sweeps that liquidity. All right, she could sweep it up, she could sweep it low. You don't know because you are not the market. You cannot decide, where she's going to sweep. No, we are going to work with what she's sweeping. So the manipulation phase is when she sweeps up or sweeps below this liquidity. Liquidity is where you have your stop losses. Now, for example, if we are in an uptrend, I am explaining the SMC. If we are in an uptrend like that, you are always buying. You are always buying, right? You are always buying. So if you're seeing an uptrend, where will you be setting your stop loss? Most of the stop losses in an uptrend are usually below. I mean, when you're buying, this is where you set your stop loss. So if I buy here, I know that I'm setting my stop loss at the former low. If I buy here, My stop loss is usually here. If I buy here, my stop loss is here. So that if she goes against me, it will just take me out of the market. So you can see in an uptrend, people have more stop losses here. Now, when she does this in an uptrend, she has chopped your stop loss. She has swept all the stop losses here. That is what you call liquidity graph. So you can find liquidity in an uptrend. All right. If she does this, she has swept all of this here. All right. So look at that. She has done this. But if you see this happening, downtrend, you are selling. So if you're selling, where are you putting your stop losses? Where are you putting your stop losses? That's where money is. Your stop losses are above in an uptrend. So if I sell here, this is where my stop loss will be. If I sell here, my stop loss will be around here, above where I sold. If I sell here, my stop loss will be. So in a downtrend, your sweep of liquidity is usually like that. She's going to clear it. So when she does this, after manipulating, what does she do? After manipulating, what does she do? She starts to distribute. These are the three phases of the SMC. She starts to distribute. So can you see that is the concept you are using? Now, this is our London session. Let's assume that this is our London session. This is our London session. This whole place is our London session. Okay. Let's assume this is our London session. This is an example. She does this. Fiam. She clears all that liquidity. She clears all that liquidity. Don't get me wrong. Your London session can be a consolidation as well. It can be a consolidation as well. All right. That is what they call liquidity pool. In a consolidation, some people are buying, some people are selling. So there's stop losses up and above. That is the one they call liquidity pool. There is stop loss everywhere because we don't know the direction of the market. You will see some silly traders trading, trading the consolidation. Newbies, they will be trading consolidation. Then the market goes and then fiam, it's their stop loss. We don't know the people that we lose because when you have this, all right, when you have this is a consolidation. This is a consolidation going on. The market is moving sideways. So some people are what? Buying at the bottom. Some people are selling at the top. Some people are buying at the bottom. Some people are selling at the top. All right. So when you have this happening, it's accumulation of liquidity going on. All right. It's accumulation. Then when you have it on a downtrend, it's also accumulation. All right. For liquidity. For liquidity. All right, because I'm going to be putting, if I'm selling here, this is where my stop loss will be. If I'm selling here, this is where, so this is accumulation. This is the accumulation phase. All of a sudden, market will just do via, or it will just come down. That is your manipulation. Then your distribution, after manipulating you in a consolidating trend, she starts to go her way. Meanwhile, everybody's stop loss has been chopped. She has kissed and loved up with your stop loss. She's taking your money and she's leaving. So those are the three phases of the SMC. Now, do you recognize it in what I'm about to show you? The Asian session, the manipulation of the Asian session, the London session, sorry, London session, manipulation. Then what I want to see, all right, is for her to break and close below any pullback I see here for my change of character, and then I sell. All right. So I'm going to show you in the practice. Now let's look at it here. So the strategy proper, you can see is SMC, is SMC. Now I know the last one, we lost it. The last one, we lost it. I usually take it on the 1 minute time frame. On the 1 minute time frame. All right, so let's look at typical examples here. All right. Yeah, hold on till after the class, okay? Hold on till after the class. Thank you so much, Frederick. I really appreciate you. All right, so look again. Remember, I said the red one is the New York, and I said that this is the London session. I only marked the New York and the London session. This strategy is the easiest thing since ABC. Beautiful. Now, looking at this, you can clearly see London session, New York session, London session, New York session. This is the high of the London session. This is the high of the London session that has already been marked right there. This is the low of the London session that's already been marked right here. Now, of course, where did she sweep first? Where did she sweep first? Where did she sweep first, ladies and gentlemen? Where did she sweep first? She swept below first. Good, thank you so much, Faith. She swept the low first. Now, what are you looking for? You're looking to see a change of character. This was the lowest low. You're waiting to see a change of character. Please, always verify your change of character. Wait for, if you're looking at it on the 1 minute time frame, wait for it to break, to give you change of character twice. Wait for it to give you change of character twice. Don't jump on it. Relax. Wait for your change of character, because this is a tiny time frame. She can turn back. So wait for your change of character twice. Oh, she gave us a change of character, and see, she still pulled down. All right. See, she still pulled down. She gave us a change of character here if you're going to be using this one, because this is what it is. A low, a pullback. Starting point to push it low, a pullback. Starting point to push it lower, pullback. Now, this is not looking like a pullback. It looks like she broke and closed above, but she didn't do it twice. So please do not enter until you see her do that change of character twice. She then did this to deceive people that did not wait for the change of character twice. And after doing that, she now gave you a major change of character here. And there was a fair value gap here for your entry. And that's, look at that. That was, let me see, a long position from here to there. All right. This is a 1:2 right there. It's very clear. So you have seen her, a small downtrend, all right, a change of character, an entry at the fair value gap, and there you go. That's it. That's it. A 1:2 target. Now let's keep looking at this. Another New York session. This thing expired. I need to get my card quickly, and so that this thing, I had to block my card, so my pro is not on. I wonder how far this will take us. I wonder how far this will take us. 1 minute time frame. Ladies and gentlemen, wait for your change of character twice. So this is your London session, where you have your accumulation. This is the high and the low. Where did it break first? Where did it break first? This is your high and your low. Where did it break first? At the opening of the London session. Good, good. It broke the low. Thank you so much. Thank you. You're following. It broke the low of the London session first. It broke the low of the London session first. Now, what are you looking for? You're looking for your change of character. Remember, wait for it to happen twice on the lower, on the 1 minute time frame. Wait for your change of character to happen twice on the 1 minute time frame. Now look at that. This is your downtrend. First change of character. Look at your downtrend. Look at, you see that craziness going on. Wait for your change of character twice. This one was crazy. Market was going mad. was raving mad. Yeah, I wouldn't, but I don't think I traded this day. I don't think. This was the day I told you guys you're not going to be trading. But still, it served. If you look closely, this was the last low. All right. She broke it. She broke. This was a clear, come on. This was a clear one. This was a clear one. Even if I did not want to wait, I would wait for this break and close. And then she gave me a nice, so this was where I would have entered with my strategy. I would have entered here. Where is my long? And then, yeah, I've targeted this low because she had given us so many lows. There were 2 lows ahead, so I would have targeted that one. Then a one. Remember, I would have done my what? I would have done my top-down analysis to know if it's going to give me a pullback in the big plan. All right, so I know I'm not targeting too much. Don't target too much. You can look for equal. This is an equal high. So this is like a 1:1. Some people would have taken their this thing at the equal high here. Some people would have taken. She gave it to us right there. Equal high right there. So this like a 1:1. She didn't come down. She didn't come down. And as she's going up, me, I'm moving my stop loss. I'm moving my stop loss as she's going up, so I don't lose this trade. Okay, so she kept going up. She kept going up. I mean, this is okay for you. This is like a 1:2 as well. She gave you a 1:2, right? She gave you a 1:2. But I'd even put my this thing here. All right, this was our entry. If I put it here around there, which is where I would have put it, the last low before the entry. Yeah, that's it. The last low before the entry. Let me look for it because I'm not. Let me zoom in. The last low before this was the last low before the entry, right there. So this gave us almost a 1:3. It gave us a 1:3. You can target your equal high and take your money and leave. All right. So you can see this one worked. Let's go again. Let's go. It's still breaking it lower. It's still, now this one did not give you, beautiful, I like this example. Now this one did not give you your change of character on time. See, this is where you sit on your hand. You wait for your change. If you don't see, do not enter, ladies and gentlemen. Do not enter this. Do not enter until you see your change of character. Now look at this beautiful one. She didn't give you any change of character. She kept dropping down. She kept dropping down. Broke it once, I would have waited. This is the second one, beautiful. And then I would have entered. So she gave us, it kept going up, it kept going up. So let's use our long, which is here. Long position. There you go. The next low. Let's go. Oh yeah, she gave us a resounding 1:4 right there. All right. So you can clearly see you hardly lose. All right, you hardly lose. So now I know some people are wondering what is a gap. Now let me tell you what a fair value gap is so that you can target. For those that know, this is the end of the, that's it. That's the strategy. That's the strategy. I just want to see how many people are still here with me. That's the strategy. Some people have already left because I mean, they were like, is this so easy? But they're going to miss the surprise and I won't be there to give it to them because those that are going to stay to the end of class have a surprise. They have a surprise. They have a surprise. And I'm going to take note of those that stay till the end of class. I'm not even kidding. I'm going to stay for those I'm going to take note of those that waited to the end of class. All right. Now she did it again. Change of character, 1, 2. There you go. That's your answer there. For a long from here. See, she gave you a resounding. She gave you a resounding 1:3. All on the New York session, baby. No mistakes. Yeah, I have to get my card attached to my trading view one more time. So I had to change my card. All right. Now let me show you what a fair value gap is, and then we can call it a night. Then you ask your questions in the chat box. I'm going to take your questions. Start putting down your questions now so I can answer your questions. We have stayed for almost 1 hour. Yeah, almost 1 hour, 30 minutes. Because we didn't start on time, we would have finished earlier. So this, let's say we have an uptrend. Let's say we have, don't worry, I'm going to change the color. Let's say we have an uptrend. I'm going to change the color so that people don't get confused. All right. I'm going to change the color so that people don't get confused. Don't worry about it. I'm just trying to illustrate something. All right. I just want to illustrate something. All right. All right, so I'm just gonna make the bullish candles green. I'm gonna make them green. These ones are gonna be red. Okay, green, red. All right. All right, so this is a typical uptrend. And you can see her movements, very beautiful, perfect movement. You can clearly see this happening. Up, down, up, down, up, down, clear uptrend, right? You can see clear uptrends, beautiful. Now imagine, of course, you expect a pullback here. Imagine this happens. This is just a bonus. We have finished understanding the strategy. Imagine this happens, all right? All right, so I want to show you guys something. So this is an uptrend. Now I need you to understand how a typical trend moves. When she moves, usually a typical trend will pull back 50% of the last move. All right, it always pulls back, most times pulls back, a proper trend pulls back at least 50% of the last move. Now I'm going to bring it out again with my arrows. So this was the first move. Ooh, sorry, I think I picked the wrong thing. So this was the first move. It pulled back 50% of this first move. All right, went back and then came back 50% to meet the head of the last candle. You see the same level. You can see it's the same level right there. It's the same level. And then she moved up again from here, pulled back to the same level as this one. Right? Now she moved up again. She pulled back, but she did not come down to the level of this one before she went up again. Now, the distance or the space between the top of this one and this one is what we call the gap. So if you're targeting for a what? If you're targeting for a buy, you will wait for her to come back and fill this gap. They always do. They always come back to fill the gap. Sometimes they don't anyways. They'll come back later. So I wait to target the gap to be filled here. Then I buy here. All right. I come and buy here so that when she moves back up, I am with the trend. So that's what I call a gap. So if I see a gap to target here, let me see if there was a gap here. Beautiful. There was a gap here. All right. There was a gap here. I'm just going to, ooh, that's too much. I'm just going to zoom in so that we can clearly see our candles and see the gap between those two candles. Now, if you look closely, you will see the top of this candle and that. There was even an entry here. Look at that entry. This was the gap. Then the wick of this candle came, filled the gap, and it moved. Let me open it more. Look at that. This is an example of a gap. The space between this candle and that candle. Then it came back, filled the gap, and moved. All right. So that is an example of a gap. I'm going to drop a full lecture about how to find gaps on my YouTube channel. So if you're not following me, go to my YouTube channel and follow, and you will see I'm going to be dropping more about fair value gaps and how to identify them. All right. So that is the strategy. So I'm going to be taking your questions. All right, so let's see. So someone said, Suleiman said, can you explain better the stage after breaking the low and the high? Right. So remember the three stages: the accumulation, the manipulation, and the distribution. So the manipulation will happen. So I'm going to go back. I'm going to clean all this off. Now look at this. Now, after she sweats the London sessions low, what you're waiting for is for her to turn back. You look for your change of character. She has to break and close twice. I like to do it twice just to be sure. So she broke and closed once, twice. Then your entry will be around here, the top of here. Then you enter and then move. You take your buy. That's how easy. You just wait for her to turn back, wait for her to break, and then because she has started her distribution. So this was the accumulation. This was your distribution, your manipulation, and now she's distributing upwards. So is that distribution that is your money? That's your money. Your money is in your distribution. Okay? You like to join my class? Hold up. I have a surprise. You get the screenshot, CHoCH. Oh, you were using your phone? I was using my phone for this Zoom. Oh, okay. Never mind. I got a surprise for you. Vera, thank you so much. Thank you, Faith. Oh, I'm going to be dropping a recording. Oh, yes, it works for Excel as well. Oh, someone already dropped. God bless you. That's my moderator, by the way. Femi asked a very important question. Thank you, Coach, for the session. Have you tried this session on the currency pair, such as GBP USD? I will advise you to go ahead, follow your guts, and use that. Do that for GBP USD. Okay, CHoCH, you have the screenshot now. Please check for it in the... Okay, he has sent it to you in the chat box right there. Suleiman says, thank you so much. James says, I do not have a laptop. Oh, yes, you can use your phone effectively well. I use just my phone. And you can download TradingView on your phone as well. Thank you. Oh, you're all welcome. So down to the surprise. Down to this. Yeah, trust me, you're going to be making money 95% of the time. Now, I need you to use your cashback Forex. Now, I'm going to show you cashback Forex so you can calculate your risk. Please don't just enter trades with any lot size. This is what I use to calculate. So if I'm going to be taking a trade. I've seen what I want to do. I want to buy or sell. I know the opening price. You put your opening price there. You put your stop loss price there. This is why I don't understand why people like to ask, how many pips is your stop loss? It don't matter really if you use your calculator. So you put your account balance. This is an example, and I risk only 1% of my account. So let's say I have $10,000 and I want to risk only 1% of my account. All I have to do is come here, click on, after putting the opening price and the stop loss price, all I have to do is click on calculate lot size in MT5. All right. And the contract size, check your contract size in your MT5. Once you open gold, go to details of that gold. Most times it's 100. Your contract size is 100 for your gold. And then you click calculate. And then this is the lot size it tells you to be using. So it doesn't matter the stop loss. It doesn't matter the pips in your stop loss. The calculator will help you. If you say it's only $100 you plan to lose in case the market doesn't go your way, it will, even if it is 500 pips, unless you don't have enough money, it will tell you impossible. You see it telling you it's not, you can't do it. You can't do it. Let's say if I do this and I say I have $200, all right, and I want to use only 1% of my account, all right, and I click calculate. You see, it's giving you something impossible. It's giving you something. If it gives you something impossible, don't bother. This is 0.0000521, which is less than a micro lot size. It means you cannot go into that kind of trade with that kind of stop loss. So when you see the strategy has given you a stop loss and you input it here and put your opening price there, and then you put your account balance, and then you click on the MT5, MT4. Please drop this link for them for them to calculate their lot sizes. So if you click on that and it does that, and you see something like this, it means, guy, don't take the trade. Go and sleep and wait for the setup that is good for your account. That's what it means. Because there's nothing like 0.0000, nothing like that. This is less than a micro lot size. All right, it's less than a micro lot size. So you shouldn't be taking that trade. But if you want to be stubborn, I would do a 0.05. And then if it clears my money, it clears my money. I go and sleep. All right, because traders are the most stubborn people in this world. They are the most stubborn people in this world. Oh, yes, it works for a sell as well. Jessica, it works for a sell. So if it crosses up, I will show you an example where it gave us let me see what she asked. Yeah, it will show you, yes. It will show, oh, I have missed that, it's way up there. So Okuchi asked a very, very important question. She said, so you watch the market on 5 minutes time frame and go down to 1 minute for execution. I can watch it even in the 1 minute time frame, but executing on the 1 minute is better. All right, I can even watch it on the 1 minute time frame. There's no need for me to. So 5 minutes, if I say, okay, I want to wait for a change of character on the 5 minutes. That change of character on the 5 minutes, I used to use it before, but I noticed that change of character on the 5 minutes, it would have given me 3 change of characters in the 1 minute. So I would have missed some good pips. So why not just wait on your 1 minute time frame and be watching? Now you need to do is wait for a change of character twice so that it can tell you, okay, it is really ready to change directions. Okay, so you can even watch it on a 1 minute time frame, my dear. Watch it on a 1 minute time frame. Oh, you wish to join my class? All right. Okay, this brings me down to, if you're willing to join my mentorship, because I have some of my students here, they are winning all the time. It's just $100 for 3 months. It's $100 for 3 months. You get a course that changes your mind about trading. The way I trade is not the normal way you see. Favor, please. Calm down, Jude. How do you use the top-down analysis? So Isaac, I'm going to be putting that in my YouTube channel. Okay, I'm going to be putting that in my YouTube channel. I'm going to be using that in my YouTube. I'm going to be putting that in my YouTube channel. So when you go to a higher time frame, you have to see what the market is doing. If I like to do my top-down analysis, I start from the weekly to see what gold is telling me. What is the overall trend? What's the overall trend? The overall trend is a sell right now. The overall trend is a sell right now. So this is the weekly. I start with the weekly to see what is happening. So on the weekly, I could zoom closer to the market. I know that here they've hit a very strong point that is making all of them turn down from here. So I've looked at it and I know, okay, on the weekly, she's on a sell. Then I come down to my daily. I say, okay, on the daily, what is she doing? On the daily, I can clearly see that from that highest point, she's selling. She has given me a change of character, like what, 2 times. So she's selling. So XAU USD is actually on a sell trend. So if I use my strategy for the 1 minute time frame and I see a sell, I'm glad because I know it's going with the trend. All right, I'm glad because I know it's going with the trend. So when I'm selling, I target a 1:3. But if my strategy is giving me a buy, I know, okay, I shouldn't overshoot this because I know that the trend on a higher time frame is a sell. All right, is a sell. So this was from the weekly. This is from the daily. This is in the 4-hour. So I can see that she's clearly what? Selling. So, but if my strategy is telling me, oh, she has just swept liquidity from the low, I know that I'm going to buy. And if I'm buying, I know I'm going against the trend, which is a sell. So if I'm going against the trend, I know that, okay, she's probably just catching a tiny pullback. Let me not overshoot my target. I will just take a 1:2 and I'm out. Or I take a 1:1 and I bounce. I scalp it and I'm out. But she will surely give you a good move after the change of character. She will surely give you a good move after the change of character. All right? She'll surely give you. So I can see the 4-hour is still telling me a sell. She has done a pullback and then she's selling. On the 1-hour, it's still telling me a beautiful sell. She has done a pullback. I mean, this looks like a pure manipulation from yesterday. That manipulation was something. I don't know how to say it. She was supposed to continue to sell. She started shooting up for something I didn't understand. I didn't get it at all. I did not get it because she had already closed this gap. Okay, there was a gap. There's a gap here. So she had already started encroaching on this gap. So that gap on my students saw the gap. I'm so proud of them. Put a 5 in the chat box if you're my student. I want to celebrate you guys today. You guys are awesome. You're the best. 3 of them have passed their evaluation on prop firms. I'm so proud of them. Like, I can lift my shoulder high and say, yes, those ones are my students. Let's drop a 5 in the chat box. I love you guys. You guys are the best. So there's a surprise. If you want to join the family, Tega, please drop the link. It's going to be $100 for 3 months, just for a period of time. I'm going to be shutting it down. It's usually $200, but I'm giving it away for $100 for 3 months. So if you are actually interested in joining the financially fit family, all you have to do is click on the link Tega is going to drop. Okay, I don't know if Tega has that link. Deborah said, Deborah, you're welcome. I love you too. Okay, so ask a question. When do you know to sell? Now, when do you know to sell? You know to sell when she has broken the structure above. So I'm going to show you an example of that sell. A lot of people are waiting for that. So let's go down and show them. All right. Tega, please go on the link in my Instagram. Please copy that link for the #1 reversal strategy in the world and post it in the chat box for them. For those that are interested in joining, it's just going to be $100 for a period of time. So we are looking for sell. Now, let me look for sell for them so they will rest. Let me look for where it swept. Aha, beautiful. Oh, beautiful right there. Right there. Right there. Lovely. So let's go down to the 1 minute. So for the sell, if you're going to be looking for a sell, she must have swept liquidity on the top of the London session. I'm sure if my husband is in this trading, in this training, this man will gamble all his money. Men are crazy when it comes to trading. They are not as careful as the women. And that's why I have some warrior women. I have a 6-figure trader. I have a 4-figure trader. I have a 5-figure trader in my team. So you're looking for how to sell, right? I think this is it. Was it this one? No, it wasn't this one. Where was it? Okay, this was the last one this was on Friday, the one that's really failed. It failed woefully. So I'm looking for where we had to sell. All right, I'm going to show you. I'm going to show you where the strategy worked for a sell so that everybody can go and rest. All right, bear with me. I'm looking for where it's sold. Oosh. I'm going to make this on the 5 minutes. Let's see. Where it's swept. Aha, this one. Look at it on the 5 minutes. Please bear with me. Let me show you on the 5 minutes. That one. So what happened? It swept above the London session, which is the green one. This was the height of the London session. So it swept above. All right. When it swept above, what you're looking for now is a change of character. A change of character. And your change of character happened twice here, even on the 5 minutes. So that was your entry. This is your stop loss. And bam, there you go. That is your sell. A clean one is to 3. That's your sell. A clean one is to 3. Now, so for the surprise, yes, you can go ahead. So for the surprise, now for everybody that is here, please take a screenshot of everybody that was here. I'm going to put them in a separate group. Those are the people I really want to see. Take a screenshot of everybody that is still here. Take a screenshot of everybody that is still in my class. If you've done so, please tell me. That's fine. Suleiman. Tell me if you've taken a screenshot of all the participants that are still here. Black Octagon. I can't wait. You are supposed to be in my class. You are supposed to be in my class. I know. You've been looking for my trouble. You wanted to know the strategy before the time. And that is why my assistant blocked you. Your wahala is too much. I know you. Shout out to Esther if she's still here. Happy birthday, baby. I hope you're having fun today. And the lady here that her baby's birthday is today. I don't know if she's here, but shout out to you. I'll tell my assistant to unblock you. Thank you. Yes, so I've been taking a screenshot of all the participants that are still here. Tega. If Tega can't do it, my Vera can do it for me. You're welcome, Esther. You're welcome. Tega, please take a screenshot. If Tega doesn't do it, Vera can do it for me. I need a screenshot. All right, I need a screenshot. Good. Vera, please take a screenshot of the participants here, the ones that are still here. If you've done it, please tell me if you've done it. Who is still here? Tega, I don't think Tega is still here. I can't find him. This is my assistant. Who else is? Faith. Please take a screenshot of all the participants that are still here, please. I have a surprise for them. Oh, Faith has done it. Thank you so much. Thank you. Now, for those that are still here, I need you to do something for me. You can go on your social media platform. Go on your social media platform. Just do a recording of me teaching you right now and celebrate me on your platform, on your social media platform. I have a special gift for the person that does a beautiful story with a video. Listen to the instructions. A video showing me this, showing me teaching you. Those that went to IM, they know how to do this thing very well. I'm expecting them to catch it. So I have a special surprise for one person. Let's make it two. Two people that will share me properly, tag me on your story, teaching you the best strategy on gold for your lifetime. The best, this is the best strategy you will ever find. And this strategy is not about to change anytime soon. It's going to be giving you a 95% win rate all the time. All right? So just show me. I hope my video is, let my face show, let my fine face show. I want to just celebrate me on your story. Tag me at Madam Financially Fit, and I will see it. I'm going to select two people, and I have a surprise for them. Now, for all the people that are still here, I'm going to be sending you a link. You're going to join me in my trading sessions for next week. For next week, you're going to join my students. We're going to be taking trades together. The only thing is that I hope you'll be available for the New York sessions. I'm going to be coming on live with my students. I'm going to be giving you the link. You're going to join me. We're going to take trades for the whole of next week. At least for 3 times, at least. We will take good trades together. We will win and we will lose together. So those that are still here, congratulations. You are going to join me in the trading sessions. We are going to trade for a whole week straight. We are trading together. You're going to have a feel of what I do with my students for 1 week. Congratulations, guys. And those that are going to post, I have a surprise for you. Those are going to post me in their stories tonight. I have a surprise for you. The recording will be dropped in the Telegram channel. The recording will be dropped in the Telegram channel. And very soon, when I am done helping those that I want to really, really help, I will drop it for the public so that everybody can participate. So yes, it's going to come on my YouTube channel as well. I know my students are angry. Please don't be angry. You already know why I'm doing this. My students already know why I'm doing this. Bear with me. Don't worry, it's better when everybody is winning. So I'm going to be dropping the video, the recording of the video for you guys. And I'm going to be putting it on my YouTube channel very soon. So if you're not following me on my YouTube channel, do so. So there are two categories of gifts. Those that stay till the end will join me. If you don't have please take the screenshot again. Some people have come back. Take the screenshot again, Faith. Some people have come back. So if you are not, if you are here, you tend to join me with my, and then I've told you the link to join my, I'm going to also drop it in Telegram. If you want to do my mentorship program with me, is there. But I'm going to give you guys a free 1 week to be my students for a week where I'll be having trades. And then those that post will get a surprise for me. I love you guys. Thank you for staying to the end. Angie, why are you people begging? Why are you people angry now? Okay, someone dropped it right there in the chat, but they're going to drop it in the Telegram channel. All right? They're going to drop it in the Telegram channel. Right, beautiful. I want to just stop the recording now.